The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Morning, folks. Tommy O'Brien, my dad Tom O'Brien, on his final day of vacation, getting a well-deserved week off. He will come back with some energy, I'm sure, on Monday, and the markets have some energy. And filling in, we have our man, Mr. Basil Chapman, back. Basil, good Friday morning.
Good Friday morning to you. Oh, what a week, huh?
What a week. We got stories every single day, right? We definitely do. And
absolutely.
We got another story today, of course, as I'm sure most people know watching. Big jobs number came out, 287,000 jobs added versus whether it was 165, 175 expected, and the market gets a pop. Dow up 165, NASDAQ up 40, and S&P up 20. So what are you looking at this morning, Basil? You know, we got action, that's for sure.
So one of the things, certainly from our opening call subscribers, we've got quite a number of long positions. But the most important thing is this morning at about, I think it was 8 o'clock, maybe it was earlier, I said, oh, no, what am I saying? Yeah, let me just check.
Sure.
I did so many charts.
Lots of stuff happening. I hear you. I know.
You remember, all week we've been looking at demonstrating some of the techniques that I use. Whether it's in trading or whether it's for my subscribers. So I like to demonstrate every day. I show why we're looking at things, what we're looking at based on the Chapman Wave methodology. And I'd spoken to you about a particular technique which I'd used, which was a left side, right side price time match. It's called the Chapman Wave left side, right side price time match. And what it does is...
and I'm looking at it on your screen. For people that, you know, aren't looking at it, you know, it's just a lot of symmetry as they're moving on each side. A down move to the upside. Go ahead, Basil.
10x bars to the left, 10x bars to the right gets you back where you started. That's basically it. Or what if it could be 20, it could be 30. Sometimes it's as many as years. We looked at. I won't do it now, but if you look at the the Nasdaq, if you look at the QQQs from the 2000 high, maybe we'll do that. I'll show you the left side, right side price time match. But
we can check it out later. Sure. Yeah.
Right. So I'm using what's called Chapman Wave inside wedge. I identify a left side. A pivot point which goes to either an arch high or a trough low, and I can draw a diagonal line that will take me to a point of contact with the horizontal that takes you back to where you started way before. So in this case, it was 2102 was the high that we were looking at from 10 o'clock a couple of days ago, and now you're looking at the 10-minute chart, and it comes all the way back down to the 2081 area, and it starts on its way up. I had shown this chart I sent it to subscribers this morning saying we've gotten to a peak C, and it's very unusual for the futures to be up like this or down more than 5 or 6 points when within half an hour you're going to get some really important news. So
sure.
You know, something's going on here. But if it's positive, we should see a spike to a leg D, and that left side high will be exactly between 8:30 this morning Eastern Time and 8:40 this morning Eastern Time.
And that D point is, what is that, 2112?
2102.
2102.
Yes.
Okay, I just couldn't see the chart exact. 2102.
Right.
Okay.
Yeah, I can't make this particular
That's okay.
chart
I just want to make sure.
Anyway,
yep.
Now I'm going to move it away and show you what the result is. There is that left side, right side price time match. There's the dashed line, and it goes exactly to let me show you the.
Yeah, no, right as that jobs number came out, it just
8:30 to 8:40, and there it is at 8:40. It just spikes right through the 2102 level, and it goes to I think that was 2109. I think 2110, round number high. Peak D pulls back, and now we're in leg E to the upside. So that's just the technique that we've been using that I wanted to show you to demonstrate that if it failed, it would have failed within a couple of bars, but it hit it to the exact time and exact price. So that was just a technique I thought I'd show.
Nice.
Now,
no, definitely. You know what? So with this being the Bull Bear Binary Option Hour, right? I have my chart in the den, and maybe you can pull it up as well, Basil. So here is the same chart, of course, the S&P.
Yep. Okay.
And so here,
the time frame is 10 minutes?
That's a 5-minute. Let me put it on a 10-minute. This is just, they automatically load up on a 5-minute when you pull them up. But here we go. That way we're looking at the same thing we saw with you.
Okay, I could go to 5. I've got the 10 or no.
I have the 10 up now as well. Okay. So what's cool, so here is the market for the daily spreads. Now they have, and you know, we've covered this with Darrell a lot. Of course, they have so many spreads they really do on multiple time frames across, and let me just pull up to make sure I'm looking at everything. I got too many windows. Here we go. So they have dailies, which are, for the S&P, we're talking about 40-point spreads, basically. And so, Basil, that's going to be a 40-point spread, and that's going to be basically a $400 pie, to put it that way, okay? So,
excellent.
So whether you're at the ceiling or the floor, you know, that's where your risk-reward is going to come in. Now, if you want smaller time frames, smaller spreads, 10 a.m., 12, you know, and they reset and they recalibrate during the day. So normally when my dad and I are doing the show, we like the daily spreads because, you know, especially, you know, now what you could have done is you could have been trading that jobs number, you know, and you could have sold that spread, but it just gives you the time for the day. And usually the premium is not substantial to leave yourself that opening. So let's say, right, that we were looking at it. The market was at about 2097 as we were talking about where you were anticipating. So you have two choices, I think, you know, and depending on realistic. Now, if you're looking for, number one, a rise in the market, okay, there happened to be a great spread at 2090 was the floor, and 2130 would be the ceiling. And we'll go over this when we come back, all right? I just want to go over the risk reward because applying that trade theory to maybe some of these spread trades with your defined risk, okay?
Great. I'd love to hear it. Good.
Come on back, folks. We will take a look at these markets. Basil Chapman, Tommy O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. It's Friday. The market is up 160 on a good jobs number. We're talking with our man Basil Chapman, and we are talking S&Ps, and we're talking the Nadex platform. If you haven't tried out the Nadex platform yet, you can click on the link right on the front page of TFNN. Download a demo account. You'll be trying the exact system that we're looking at right now and be able to trade these things and see how they move. So, Basil, you know, it's tough talking about theoreticals with these as you get into them because they're tough enough with just understanding the risk-reward. But
Correct.
let's say right now, let's look at this market. So I noticed, I was looking at your charts. Is this a peak E that we're approaching here?
So let me just do this. I immediately went to the VIX index, and I did because that should be the inverse. And the VIX index, which is the volatility index,
Yes.
it goes down when the market goes up. Essentially, when it goes down, I consider it buying pressure.
Okay.
I don't like this fear and greed. That's nebulous. What is fear and greed? But buying pressure and selling pressure explains it. And right now, I've got a trough D in the VIX, which says there should be a bounce. It's at 1376. It made a low this morning of 1338.
Okay.
And if it goes at 1393 is the moving average resistance that I'm looking at right now. But if you look, I like to put them together. So if you look at the, let's just imagine now.
Sure, looking at the VIX and then the S&P.
Yeah, so you
same
had
confirm.
no position,
Yep.
and you say, okay, now what am I going to do? You don't have to do anything. But if you were looking at something, this is a leg E. But a powerful move that goes over 135 in the Dow to the 150 area and then holds above that, which is sort of what we're looking at now, says that the majority of players have either completely missed it or are doing short covering right now. And there are some people who have been waiting to get in and just said, you know what, I'm just going to buy. It's a little higher than I wanted, but I'm going to buy because it could keep going up. Between 10 o'clock and 10:10, that's kind of the, between, I'm sorry, 9:30 to 10:10 in the morning Eastern time, that's kind of, Larry was talking about it as amateur hour. Maybe amateur hour, but let's put it this way. The real big hitters in the game are looking at this and saying, where will it settle? So now 10 past 10 to about 11:10, that's where you're looking at a market that says, okay, we're going to position ourselves on a Friday going into the Monday, Tuesday, Wednesday area. Because this is a breakout and looks very good, if there's a pullback, I suspect that the pullbacks, at least in the beginning, are going to have very good support. So I'd be very hesitant to do anything on the short side right now.
Okay.
And this makes it a very difficult day because if the market actually holds up into the 220 to about 20 past 2 to about 20 minutes to 3, a lot of people are just going to say, you know what, if it gaps up on Monday, I haven't a chance. I have to do something. So that starts to give you some support going into the close. So that makes, if you weren't in the move already, now's the most difficult time. If you were only up 125, I'd say, wow, peak E, VIX starting to move. I'd immediately grab the short side and say, great, I don't mind taking a 5-point, if I can get it, 5 points in the S&P. This makes it much more difficult. I'm just explaining my position. That's all,
that's great. And it's probably tough to be short with such a big jobs number, right? Regardless, in terms of just from a risk reward, you can definitely get pullbacks. But I think if you were going to go short, you'd have to anticipate for a very quick trade for that small type of pullback with a very tight stop, because you're not going to get a huge deceleration and negative turnaround, I anticipate, with just such a big number. It would be,
especially with yesterday's week session intraday, and then it came back a bit at the close. And
there was good news yesterday as well, you know, that's still being digested. So it would really have to overcome a substantial amount of just basic news on hardcore job statistics, whether it's, you know, jobless claims, Labor Department, private job growth, all of that.
So what I would normally do at about this point, I suddenly say, okay, oh, that's right. You know, I've got so many indicators. Oh, wait a minute. Let me look at the SPY versus the USO position. And the USO right now is pulling back sharply. That's crude oil.
Okay, yes.
And look at the divergence. How often do you see this kind of divergence in the market? So that says to me, oh, wait a minute. if crude oil is pulling back, and normally you get some parallel motion, maybe there is a little bit of a downside move in the SPY and in the Dow. But I think that these have separated for now. So I would treat it as if the weight, the sheer force of people having to cover, and it was so quick. I mean, they didn't even have a chance. And there hasn't been a pullback for them to even think. I love this. You know, I think many of us have been in this position, especially some of us have been trading for years and years. When you are wrong, and it's so quick, that's when you start to rethink. And you know, the expression is, your first stop is your best stop.
Sure, yes, for sure. And same thing, your first instinct, you know, you always have a plan, right? And sticking with that plan.
And I'm saying to myself, if I never got out, if I was wrong and I didn't get out the second there was a spike to the upside, what am I going to do now? I mean, it has gone huge against you. You're up almost 2%.
That's why you stick to your plan, because there's almost no good decision, right? I mean, the decision probably is to get out if you're past your plan, but I understand what you're saying in terms of... So here we are. I'm back to the ESU, and I'm saying, wait a minute. If you're looking at that pullback, what happens over the next 15 to 20 minutes while we're on the show is going to be very important. Why? Because if all of a sudden crude oil does become a factor just as a directional indicator more than anything else, then it's real simple. The ESU, which is the September E-mini, would take out, probably it would go to about 2107 to 2105. If it takes out 2105, then all of a sudden I think you can say, okay, maybe we've seen the high of the day. There doesn't have to be a big pullback, but the damage is done, and now it's just going to settle in. But you can see that there are waves of buying, and those waves of buying are very challenging. And if you go to many of the sectors that were very weak, let's go to the XLF, for instance. Look, the XLF is just gapped up. It's not a big deal, but it's at 2282. Yeah, no, that has strength today for sure.
It's showing signs of participating. The IBB has been tremendously strong, and then was very weak. Not very weak. It was weak early this morning. It's only up 34 cents. So it's saying this is part of what I look at as the rotational sector divergence that you get in markets that are moving strongly one way or the other. And what happens is that all of a sudden you get some sectors that were strong that suddenly come back, they're weak, and then sectors that were kind of dormant and they're suddenly showing strength. Fund managers will dive in there. Let's look at Amazon, if you don't mind.
Sure.
Just right now. Look, Amazon.
I always like looking at Amazon.
All-time high. Look, all-time high. This looks like a brand new move to the upside. I'm going to call it an A rather than E for now, and we'll see. So this is the most difficult period, and I think I'm speaking for a lot of people.
So I just want to highlight a trade, right? So let's say we were more bearish than you are, right? Let's say that you do see maybe a potential failure, and let's say maybe there wasn't as much just driving news, because I look at things just, you know, which way can markets explode, right? Especially with the trades that we like to make, where it's small risk, maybe risking 1 to make 3. So you really want to have a potential on your side for the market to make big strides in the direction that you're playing. And we'll talk about when we get back. But, you know, on the negative side, that would be really hard-pressed to happen today. So I would be hard-pressed to be making those, you know, small risk, looking for the massive move down on a day where news is dominating with huge job growth. It's not a small number. We'll talk when we get back. All right, Basil Chapman, Tommy O'Brien, Dow's up 168, S&P's up 20, NASDAQ up 50.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Tommy O'Brien, Basil Chapman, the Bull Bear Binary Option Hour. If you have not tried that Nadex demo account, give it a try, download it. You can click right on the Nadex banner on the front page of TFNN.com. So what I wanted to walk through, and that's where, you know, when we talk about this Nadex platform, I just like presenting opportunities, you know, not giving really even trades. So here's where the market's at, 21.12 right now. So what I pulled up first, Basil, is I have one spread where the ceiling is 21.10, so we're 2.5 points above the ceiling. The floor, this would be if you were looking to go short. The floor would be 20.70. And so right now, by selling this, which is what you would do if you were short, you're selling it at about 21.07. So you're paying, you could say, you know, 5.5 points in quote-unquote premium. You don't get anything back until it trades under 21.10. But the benefit is selling it, you're only risking $30 because it's basically $10 per point. And if you saw the type of action that you could get a move down to 20.70 potentially, that move you'd be profiting 3.70. And those are the trades that we really find attractive in these types of markets if you're expecting big moves. Now, on the other side of that, we've moved up so much. I don't think you could get a move 30 points up, you know, another 1.5% when we're already up 1% in the markets, up from here. But let's say you had some type of belief, or you saw that kind of directional bias, or you just were looking big up. There's similar ones to the upside, 21.15 for a floor to 21.45, and real similar. You'd be paying about $28, getting into it, buying it at 21.17, paying almost that same 5 S&P point premium that it would have to trade up to before you broke even. But with that type of risk reward, there's some good opportunities that this platform, and that's kind of what we like to focus on, Basil.
So the point that you're making, and correct me if I'm wrong.
Go for it.
Is that at any point during the day you could exit the trade, or do you have to wait for the closing?
No, you could, exactly. These trade as long as, you know, they're within the ballpark and there's an active bid offer. But yeah, anytime that it's, especially within, you know, even close to these floors and ceiling marks, there's an active bid offer. Now, when it's at the square middle of the spread, So from the 2115 to 2145, let's say the S&P reaches 2130. That's where it's going to be basically the bid offer is going to be straddled right around 2130. It might be 2129.7 by 30.3. And that's because, right, there's not going to be premium based on either side because it's basically an equal risk-reward trade at that point for upside to downside potential. So you're just going to go ahead.
Do you collect the premium if you were to sell each one of those? In other words,
you know, Darrell loves playing that side of things as well. So, you know, in the same respect, right? So let's say a trade that you could probably make right now yourself if you saw this. And again, you can get out of these positions. You know, you can't set automated stops, but they have bid offers that are active, and you can use mental stops. You can get out of them. So let's say you were directionally bullish, but you saw literally no movement. Maybe you want to try to collect some of that premium, right? Well, you could buy right now this spread, the 2070 to the 2110, and you're buying it at essentially 2107.5.
Right.
So that's you know what I mean? That's you. Now you have a max profit of $25, which is the difference between the 2107 to the 2110.
Right.
And then if it expires over 2110, you have your max profit because basically it expires for full value, right?
Right.
But, of course, if it happens to tank, there's a massive risk to collect that premium.
Well, yeah, right.
Which is what makes them tough. But now in the same way, though, you can get out of that trade. Even though in this trade that I highlight, the max loss says 375, and that's if it trades back down to 2070, you can easily just exit that trade if it moves 3 points against you. You know what I mean? So there's opportunities there as well. And I've talked about this in some of the things that I've written. If I ever make a trade, and I don't make them often, with that type of a heavy risk versus your reward,
yes,
I would consider at least getting out if that ever traded back to, let's say, like the middle of the spread, potentially maybe 2090. That way you're only risking half of the potential value, or even higher than that, you know, because I don't like trying to evaluate.
That would basically be a stop for you. That's
it would. It would, because I don't like evaluating situations where I need to be correct 9 out of 10 times to be profitable. That's a tough situation sometimes to manage correctly, I think, trying to be that certain of your convictions, even with that type of a premium.
So if I can just show you something else, one of the reasons why I would not want to go negative today and just say, let the market tell me, is this.
And there's nothing wrong with a Friday late in the summer taking the afternoon off and not initiating a trade, for sure.
Yeah, that's right.
Especially when we've already got this kind of movement, I think, you know, it can settle real easy. So go ahead.
I wanted to just say that from the high in the Dow of 18,016 on the 8th of June, we came down, and we came down to about the 17,450-ish level. What exactly was it? 471 level.
Okay.
And they made a V-shaped pattern in an exact left side, right side price time match to the 23rd at 18,011. That's the day before Brexit, right? That's the Thursday night.
Yes.
Looks fantastic. Next day, we gap down, Dow's down 600 points. We have this massive move down, go all the way from 18,000 to 17,000 on the 27th, and then run back up. But I showed my subscribers that there's a left side, the match between the 8th of June to the 23rd of June, comes out to today as the level to test 18,010 to 18,016. And look what happened. This is the exact down. I didn't even think when we were down here, I said, how on earth can we, in 2 days, get back to that level?
Such movements. I mean, we're becoming so accustomed to it, but if you really put that chart in context about even just the last, month or so, it's pretty amazing.
Right. So now that we've treated 18,000 as a friend instead of as a repellent zone,
okay,
it seems to me that this is really what I call a blue. This is instead of the gray A, which is underneath the previous highs of significance. This is a blue leg B, meaning we should go to a C and we should go to a D, and that the 18,167 high of the 20th of April is now a magnet to the upside. Even if there's a pullback, it's still a magnet. Of course, I've got this new trend line that I just drew in a few moments ago, which says that right in the 18,000 to 18,090s is strong resistance. But I'm going to squeeze this chart, and I'm going to show you something very interesting. This is without the technicals on it. I'm just showing you, I don't have the MACD or the slow stochastic. Going back to the May high of last year, if we at any point go above 17,000, what was that, 18,167, that high of, where was it, no, not November high, the May high of last year at 18,351 becomes the magnet. I like to look at things as if they're magnets or propellant areas.
Sure.
I'm just trying to there are. So that's the high from the 19th of May. And if you look at it as a chart formation on the daily pattern, you can see the incredible amount of work that's taken place in this big W formation. But what I love to look at, you know, you asked me a real great question the other day. What would we be looking at in terms of the shorter term if there's a break to the upside? And now look at the Dow monthly chart as we go to the break.
Hang on to that, Basil. That's a perfect teaser for everybody to come back, and we're going to finish this conversation. Basil Chapman, Tommy O'Brien, we're going to be looking at that Dow. We're going to be looking at charts. NASDAQ up 55, S&P up 20, Dow up 165. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tommy O'Brien, Basil Chapman, the Bull Bear Binary Option Hour. We have the Dow up 150 plus. We have the S&P up 21, NASDAQ up 56, and these markets just continued to climb. So go ahead, Basil.
I can't actually remember where we were because I've already looked at about 12 charts.
I know, right? You were talking about the Dow and
the monthly chart, right?
Yes,
right.
when I had asked you that question about what would happen, right, and then tying that in.
So this is what I'm looking at. I've got it here. This is the daily on the left. If folks are listening, well, I've got a chart on the left, which is the daily chart. It has all the technicals. It has the Chapman wave notation, etc. And because we made a lower low than the previous low that started at 17,331, the buy mode, they went to a peak D on the 8th of June at 18,016. Then we tumbled down to 17,063. This is the new. In fact, I meant to put, I've got it. You can't see it. I'll do it again. You've got an up arrow here. And basically, what we were looking at is a tremendous resistance from the slightly like a 2-degree angle decline that just kept repelling the price. And all of a sudden, today's the day that it spiked at a beautiful 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days up. 13 days down and around, and we've just broken out on the 13th day to the right. Now I've called this a leg B. That means that the daily chart now is in a buy mode, and the implication in the Chapman wave is you could pull back, that's fine, but we should make higher highs with a leg C, then a peak C, and then a leg D, and that's where you got to be careful. But if you look at the Brexit high here in the weekly chart, I'll expand this much. There's that big W formation. I was a little concerned that we took so much time on the right side to break out because we were starting to match that arch formation that made that curve, that made the left side V and the right side V.
Yes.
But this move up, a break in that trend line resistance, going higher than the Brexit.
That all turned around last
Thursday.
week, right, with the huge.
Yeah.
Yeah.
It was very important. Number one, it was important because psychologically you needed to get away from that downward thrust that was, just permeating every news story. All of a sudden
it was almost getting scary, right, in terms of how much it came down and what was happening. Yeah,
you could say that, but for some of us who traded in 2008...
Right, I just mean that was becoming the headline, so I hear what you're saying.
But it became scary because of the potential that if it closed at the low and then there was another bad news, you could just have another one of those big 500-point tumbles. However, trendline support held on the downside. We've broken the trendline resistance, and all of a sudden what's open is the 18,167 peak C high. That was an unbelievable 17.5% rally. And it's almost, I call it like a single leg, because you can see, except for that peak A right there, that B was like a nominal peak. If you went to
you talk about the length of the legs, I was going to ask you if, with the recent huge increase, right, in the markets, there's a lot of those legs that, let's say the A leg on the daily, I think if you can pull back up the daily, is enormous, right, because it's just one straight shot up. Basically last week. You
finish your sentence, and
So how does that affect things as the Chapman wave plays out? Does that type of huge move in one of the legs, especially the first leg of that move, how does that? Go ahead. Yeah.
One of the problems in, say, an Elliott wave analysis, and one of the reasons why I think that for me at the beginning when I was really working on Elliott wave, but I had actually started my Chapman wave for quite a while when it became very popular, talking about Elliott wave in the, 1980s with Robert Prechter.
Yes.
One of the things I found is that it got confusing because theoretically, if you've got such a big leg A or leg 1 to the upside, then a leg 2, which is like a 1/3 pullback.
Yes.
The theory in its core, not the finesse, but I'm saying just basically you would say leg 1 and leg 2 should be at least equal, but usually leg 2 is even, leg 3 on the upside is even greater than leg X to 1. In other words, this leg, I find that can really get you into trouble. So that's why the Chapman wave together with Elliott wave, I think, works so beautifully if you want to use it just in very basic concepts. So I'm looking at now in the Chapman wave, this is leg B. In Elliott wave, we can call this leg 3. Okay? But your question just sparked an idea in my mind that I wanted to talk about this because if you look at the move down in the Dow, that huge leg to the downside, which in Elliott wave would be 1, then 2 up, 3 should have taken you way lower, but in fact it was an inside bar. In other words, if I treated this as a single bar up and single bar down, that's an inside, lower high and lower low. The S&P made a lower low. So now this is very important for me. Now I skip the Elliott wave part in the weekly chart, and what I say is, in the weekly chart on the Chapman wave methodology, once we break this trend line, this beautiful channel that I'm using certain key points as a fulcrum, I'm looking at this to the upside, and I'm saying a break of 18,167 immediately makes 18,351 the all-time high a magnet. That's really what I'm saying.
And we're so close, we really are, with 300 points, right? I mean,
we've been there so many times, and for a year now we have not broken to the upside. But it brings into focus the monthly chart. Now there's a pattern that I call the Chapman wave stalk leg formation. That's the long leg. It has nothing to do with peaks, just a long move up, a body that is basically oval, and a break, which I call the body right there. And then if you break to the upside, that starts the neck of the stalk. And our stalk stands on one leg, and there's this long body, and somehow this little skinny leg, it stands, and it always raises one leg, so it's only on one leg.
Sure.
And then you get this long neck, and that creates a whole new thing in the Chapman wave methodology. But at the same time, for me, it would start a new wave up in the Elliott wave, which would be 5. And that starts an accelerated move to the upside. I'm anticipating that we actually struggle, and somehow or other we get to a new all-time high at above 18,351. And then politics or whatever it is comes in, and we have a pretty big pullback, and that's going to scare everyone yet again. And eventually we start to break to the upside. That, to me, is going to be the big move. And I think it goes into 2017. That's my thinking.
That's a pretty powerful monthly chart when you put it on that, where it's just, you know, we're coming off almost 15,500 to back over 18,000. Almost like there was both of those moves to be nothing to the downside is pretty remarkable.
And the monthly chart, the MACD has not yet crossed positive, so it could still deflect lower. That's why I'm saying I think there is a move to the upside, and then there's another scary move, whatever it is, to the downside. And that's where the MACD starts to make, it just slightly closes higher, then it deflects lower, and we go for a couple of months, and then all of a sudden it starts on the move up. And that's the move that gets the entire public into the market finally. Not entire, but a lot of people that haven't even considered the market as a venue to be, and that's where it gets the most dangerous. This is my thinking, and we'll see what happens. It's just, but I wanted to bring it in because today we did break that resistance, and you can see it in the S&P. Look, SPX.X.
Yeah, and then I was listening to CNBC this morning, listening on the way in, and it's just remarkable that we're back up over those Brexit levels even before. I mean, it's just remarkable. It really is when you factor in that Britain votes to leave the UK, and not more than 7-8 days later, we're above where we were.
It is. It's fascinating, isn't it?
You could have. There was a lot to be made if you could have played some of those trades. Volatility was there, that's for sure.
We are 49 cents away of a D in the weekly chart of the S&P.
Come on back, folks. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Basil Chapman, the Bull Bear Binary Option Hour, brought to you by Nadex. And like I say, now is a perfect time to try out that demo account and see how those markets move. And Basil, you know, my dad and I, we always are saying, try that demo account. But you can see how when the markets move 200 points a day and you're trading products with premium and optionality, that really, that's how you can learn how these things move.
I'm going to be spending some time over the coming months going through that, because you can see the patterns that I look at with the symmetry gives you time, it gives you price, and if you're wrong, you
that's
know
what
very quickly.
That's kind of why I was asking about the A-leg. I had been thinking of that myself, because, you know, even there's so many options on this platform that you can go with, and some of the ones that if you really want to up the ante, you could say, and just in terms of your risk reward and some variance, maybe they have binary options, and they have binaries that trade on a 20-minute basis on the indices. Now, those trade even actively as they approach expiration. So you could be trading a binary option on the S&P, and let's say that you're trading it, and let's just take a quick glance at where they're trading right now. Basically, my point's going to be is if you purchase them maybe 4 to 5 minutes out, and so let's say you're looking at a small time frame formation, and you get a couple points of movement, there's massive risk rewards potential. Now, these expire at 11 a.m. in 5 minutes, I'm looking at. They're the S&P binaries. The market's trading at 2114 about. And even just looking back down to 2112, I mean, that's where you're almost getting like 15 to 1. Now, that's a massive move, don't get me wrong, over 2 S&P points in the span of 4 minutes. But even keeping it a little more, at 213, 211.13.15, we're looking at 85 is the bid and 90 is the offer. And that's only 2 points, basically, point and a half of where the market's trading from.
If you look at this chart that I'm showing you now, it has the Chapman Wave projections. It has 2115.30 as the strong resistance. So this is going to be very important, because if it snaps above that, that's going to be very important, and say, whoops, it's going to break out to the upside. And but it's got 2114.65 and 2115.30. So this is a very key moment. And not only that, going into the hour is where other decisions are being made. Oh, I just wanted to tell you, the S&P right now, you remember I said it had 53 cents or something for...
Yes.
So 55 was the high.
Did we get it?
96. We've just made leg D in the S&P.
We got it. That's what I figured.
In the weekly chart.
We've seen a slow, steady incline this entire hour, and it'll be interesting to see if anything can slow it down in terms of just a steady creep. But it speaks to, I think, what we were talking about earlier. Big news events, big strength in the market, and to see any type of real decline, I would agree. And I'm not looking at the same things you are, but from a different perspective, it would just be tough to see that selling with so much strength and news driving into the weekend.
Right. And so there are a couple of things that we're looking at here. This is going to be very important because I'll be able to study the weekly charts at the end of the day. Over the weekend, I'll be giving my subscribers a lot of information over the weekend, what we're looking at, why we're looking at it, why we're long. I mean, we have no shorts at this particular time, what exactly is going on. And what's also very important is that VIX index is now at 13.54. That as long as it stays in the low 13s, it's going to give buying pressure for the day. Starts to go to 14, you'll see a sell-off at the end of the day.
And it doesn't look like there's much fear in this market, does it?
No, not at this point.
Yeah, exactly.
But there is fear if you're short.
Yes, as there should be. You know, I mean, every surprise has been to the upside in terms of news and market action, it seems like, this week. Well, Basil, thank you so much for filling in this week and helping me out with the hour. I always appreciate it. And, folks, Basil does an outstanding newsletter, The Opening Call. We've talked about it a lot this week. Front page of TFNN, go to Trading Newsletters, give it a try, 30 days. Basil, thanks so much. Have a great weekend. I look forward to the Tiger Technicians Hour.
Thank you very much.
All right, stay tuned for Basil coming up next. We got swim lessons. We got our man Dave White. And then we have a special tonight. I believe we're going to have Mr. Dave White, and we have other guests coming in. Larry Pesavento, maybe. Take care, folks. Have a great weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.